Good afternoon, friends. This is CA Dr. Dilip Satbhai. We are going to have a discussion on important changes in the income tax return ITR Form 1, known as Sahaj Form, and or Form 4, known as Sugam. The Central Board of Direct Taxes (CBDT) has notified income tax return forms 1 and 4 through notification number 40/2025 on April 29th, 2025. These ITR forms have been notified after a long wait. Every taxpayer will now have to report his income earned between April 1st, 2024 to March 31st, 2025 using only the newly notified forms. A taxpayer must determine which form to file based on the source and nature of their income. Each form has specific eligibility criteria which the taxpayer must meet in order to be eligible to file their income tax return using the currently notified forms. Filing an incorrect form does not qualify as a valid compliance. Let us see what are the changes which have been made in income tax return form 1, that is called Sahaj. Previously, ITR Form 1 did not allow reporting of capital gains. This has been changed in the current year. If a taxpayer earns long-term capital gains up to rupees 1.25 lakh, either under Section 112A from the sale of listed equity share and from equity oriented mutual funds, then they now can report the entire long-term capital gain in ITR 1. However, if the long-term capital gain exceeds rupees 1.25 lakh, the taxpayer will have to file income tax return form number 2. It is also important to note that no brought forward or carry forward of long-term capital loss from earlier years can be adjusted within this 1.25 lakh limit. If a taxpayer earns capital gains from either sale of house property or earns short-term capital gain from listed equities and or mutual funds, then they must file income tax return form 2. Until last year, any taxpayer having any type of capital gains was not allowed to file income tax return form 1. Now the main question is, who can file ITR 1, that is Sahaj income tax form. Now this Sahaj income tax form can be filed by only resident individuals, which are excluding not ordinarily resident person. In addition, they must be having an income up to rupees 50 lakhs, which should be either from salary or pension, one house property, other sources such as interest and dividends, and or agricultural income up to rupees 5,000. Taxpayers earning long-term capital gain up to rupees 1.25 lakh under Section 112A of the sale of the listed equity shares or funds, mutual funds, are also eligible to use ITR 1. These are the only changes which have been made in ITR 1. Now let us go into the details of changes those have been made in ITR 4 Sugam. Individuals, Hindu undivided families known as HUFs, and firms, partnership firms other than LLPs, who are having total income up to rupees 50 lakhs and opting for presumptive taxation either under Section 44AD, 44ADA or 44AE can file these particular income tax return. Additionally, professionals in the field like medicine, engineering, law, architecture, accountancy, interior design, and technical consultancy are eligible to file ITR 4 only if their gross receipts do not exceed rupees 75 lakh and cash receipts do not exceed 5% of their total turnover gross receipts during the accounting year. To reflect this, a new column has been inserted under Schedule BP to report income received in cash. However, clarity is needed as to why these taxpayers who follow most transactions through banking channels with such income types have not been fully included in ITR4 eligibility. Taxpayers earning long-term capital gain up to rupees 1.25 lakh under section 112A are now also allowed to file this ITR4, which otherwise they were not allowed to file in the earlier years. Thus, small traders, professionals, truck owners may benefit from this using this particular form. Despite the changes, ITR4 retains its simplicity, which remains a key advantage. Now, there are certain common points which are not applicable to both ITR 1 and 4. Only one doesn't apply to the other. So, both are applicable. First 4, 5 conditions are applicable to all, but the last condition is applicable only to ITR 4. First condition A, individuals who are directors in a company cannot file ITR 1 or 4. Those who have invested in unlisted equity shares also cannot file ITR 1 or 4. Individuals who have deferred tax on ESOPs also cannot file ITR 1 or 4. Those owning foreign assets or having financial interest outside India also cannot file ITR 1 or 4. Taxpayers with agriculture income exceeding rupees 5,000 also cannot file ITR 1 or ITR 4. Those subject to TDS under section 194N, this is applicable exclusively to ITR 4 only. So this is how the changes have been made in the income tax ITR forms 1 and 4. If you like my video, please like my video, subscribe my channel as early as possible. Thank you.